Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Raymond. Will it go higher from these levels and how are the valuations? So let's understand about this thing. Let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Raymonds, a small request: kindly support me on Patreon. Once you do that, to help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company. Established in 1925, Raymonds is a diversified group with majority business interest in textile and apparel sector. They also has a presence across diverse segments such as FMCG, engineering, and proprietary in national and international markets. It deals in high-end property construction as well across India. 11,000 stores across 300 cities in fabric, and the market cap of the company is around 6,700 crores. If you look at the financials, then sales went up by 100% in Q1 of FY23 versus last year. And remember, last year was the pandemic hit year, so that's why there's a low base, and that's why the performance looks absolutely astounding. But overall, the performance was fine. Profit of around 82 crores versus loss of over 150 crores was also looking good. It has high interest cost, and that is a burden on the stock, and that is why it does not command a very high, you can say, valuation in the market. A decent promoter and institutional holding is there. Return on equity of around 16% is at par with other players in the industry, and margins at 12% is decent, not the best of all, but decent enough. In terms of performance, the stock has done well in the last 2 years. It has done well. Otherwise, the stock was completely sleeping for the last 5 6 years. And last 2 3 years, it has ended up doing well post the pandemic. It has gained 3 times in this time frame, and numbers have remained decent and robust. Apart from say June or September quarter of last year, numbers have remained pretty robust, and I believe that numbers are set to improve going forward as things open up completely. So things should look much better. The concern for the company is high debt, but the company is looking to probably reduce debt over the next 2 3 years. It's a very difficult company to understand on paper because of the diversified business that it is into, and these businesses have other frameworks as well. So it's extremely hard to understand as to how the overall picture of the numbers could end up being every quarter, and that's why I personally stay away from such companies. So in terms of technicals, it is trading strong on charts at around these levels of 1,000 rupees. It looks pretty strong here. There is a very strong support around the 900 930 region, so 10% lower from here. It may continue to perform and surge going forward, but I think over the next 1 or 2 weeks, it looks like that the stock may consolidate. So a good levels to get into if you want a fresh entry would be around 950 960. Heavy up move is expected above 1150 level, so that's still at least 10 12 15% off. So any levels closer to 950 960 you can buy with a stop loss of 900. Looks good for long term as well as a trade, but majorly for long term it looks good at around 950 960 levels.